Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders daily video. Hope you're having a great day today and the market is treating you well. We've had some exciting moves occur in the markets over the last several hours. We had the big thing that caused the market to move is really what they said about the euro, and that they're going to do whatever it takes to keep the euro intact and keep things really kind of hopefully stable, and the market loved it, and you can see that the euro spiked up there. Now the question is, will it stay up there, or are we going to see it kind of settle down? Now, the U.S. stock market is loving it also. We're up 225 points on the Dow, 47 on the NASDAQ, 22 on the S&P 500. So the markets are responding well. We did have pending home sales fall in June due to fewer listings. We also had the weekly jobless claims fall. So less people looking for jobs or filing claims for jobs than last time. Durable goods orders dropped. So a lot of news. Hopefully we'll see things settle a little bit. As we look at trading this, it can be very difficult from the standpoint that we've had a huge movement already. And things that move in a huge fashion, one direction, oftentimes will move in a huge direction the other direction. So if it goes up fast, a lot of times it'll come down fast. So we need to be aware of that as we trade today. You can see that it was a somewhat of a universal type of a movement. Here the euro dollar moved up. Here is the Aussie dollar. And the pound dollar probably moved up more than anything. Let's see what our total movement from here to here. About 250-ish pips. So pretty nice move really across the board here. So, in fact, let's look at the others. The US Japanese yen didn't do hardly anything. US Swiss franc, we're going to see a big move down, and the US CAD saw a big move down. So what do we do now? What do we do when we have a big movement like this? Well, we have to be careful because of the possibility that it's going to move back lower. We can go to shorter term types of charts and look for the simple trading method to develop here. We're going to put on here a 40 period simple moving average. And we can see that it's moving up here. And so right now, as we look for something to trade, if we were to place our entry at the highest high of the last three, 1, 2, 3, we'd be placing it right in that direction there. Now, every 5 minutes, we're going to get a new candle here. So we're going to continue to watch that and adjust that down. But that's about the only thing that we can do. If we start to get too fancy, then potentially we're going to miss some opportunities here. Or if we get too aggressive, if we get in and it moves against us, we're going to be not very happy about that either. So as you look at these pairs, remember, volatility is kind of the key to what's going on with the moves. And when we do that, sometimes using smaller position sizes are the way to go. And if you can use a smaller position size, well, then you're not going to be making as much money, but you're not going to be putting at risk as much there either. So, simple trading method. Identify the trend, look for it to pull back to support or resistance, and then get in as it begins to move above the highest high or the lowest low of the last three. back in the direction of that trend. And if you can remember that, you'll be trading the correct way. Identify the trend and be careful with what's happening in the market in general, and make sure you don't get caught in a bad position. So with that, we'll wrap it up for today. Until tomorrow, have a fabulous rest of the trading day, and we'll talk to you soon. Thanks.